Hey guys, I'm Lee Bratcher. I had the privilege of sitting down with Chairman Patrick McHenry. Congressman McHenry chairs the Financial Services Committee in the U.S. House and has been a tireless advocate for innovation and for his constituents for many years. Chairman, thanks for taking a few minutes to sit down with us.
Honor to be with you, Lee. Thanks.
Well, the first question I want to ask is around this new comprehensive digital asset market structure, the FIT bill, that you have been shepherding through your committee alongside your colleagues, Congressman Hill and Thompson and several others, with significant bipartisan support. How has this bill differed from previous legislative efforts that are in the same vein?
Well, it differs in a number of ways. First, it takes on this line of distinction between the CFTC, the Commodities Futures Trading Commission, and the Securities Exchange Commission, the SEC. You have a debate between these two regulatory bodies of who has power, how do they police it, and all of those things. And then in Congress, you have a divide between those committees of jurisdiction, the Ag Committee over the CFTC, and the Financial Services Committee over the SEC. We've bridged that divide, which is good. Building a better relationship between the two committees, and it gives us the way to make sure that investors are protected, while at the same time fostering innovation and capital going to new technologies and be able to deploy it. That is unique to the U.S. system, the divide between commodities and securities and the separate regulators. And so we've had to bridge that divide in Congress. So in that way, it's different. What is similar to other efforts is that it's bipartisan. We have very good buy-in from my Democrat colleagues and who've helped construct, I think, what is a durable regulatory frame for digital assets. And in that, it matches up nicely with the work that's being done in the Senate by Senator Lummis, Senator Gillibrand, among others that are very engaged in a functional market regulation so that the U.S. can be at the top of the world rather than behind the rest of the world like we currently are.
And that is so important. And we have seen some challenges in the industry, and you've been calling it out publicly and otherwise about what the SEC has done, and far as almost enabling the fraudsters and stymieing the good actors in a way, of certainly not intentionally enabling the fraudsters, but through their lack of a clear framework and through their regulation by enforcement practices, it almost has been the de facto response. How, in this bill, how will people be able to determine what is sufficiently decentralized? When does it become a digital asset security, and is there a way for that asset to then become a digital asset commodity?
What we've long understood is that raising money, an investment contract, and the result of an investment contract are two different things. So we build upon that. So you can raise money in a securities regime for the development of a technology. So you can raise money and then use that money to develop the technology. And when that technology functions and is decentralized, it can be traded and used in a commodities regime. If it is not decentralized and it's not functional, then it should not be regulated like a commodity. And so we make that distinction. We have a set of rules by which people can clear themselves of a securities regulatory remit and get into a commodities regulatory remit. We do this in society on a regular basis. And businesses do this. Every business formation that either takes bank capital or investment capital to deploy technology converts whatever that thing is, a bank loan, into perhaps a physical product or an invention of the mind that is used in a variety of different ways. So you can take an investment contract and turn it into intellectual property through invention. We understand that. We build on that in the digital asset regime in a way that is pretty sensible. But its decentralization is the key the key piece that distinguishes between what is a digital commodity and what is a digital security.
Yes, sir. And that term decentralization is sort of operationalized in some more nuanced ways that we can cover another time when we have more time, because it does take quite a bit to really drill down there. But I do want to shift to another bill out of your committee that is of, I would say, equal importance, the Stablecoin Act. And, as you know, the audience may not, if stablecoins were a country, they'd be the 15th largest buyer of U.S. Treasury bills. They buy more treasuries than Saudi Arabia would. 98% of stablecoins are denominated in dollars. So we use this as a talking point to tell our elected officials in the Texas delegation that this is an extension of the U.S. dollar's world reserve currency status and prolonging that status, and also a tool for national security. And I think the bill that your committee has developed enables the United States to take advantage of that advantage that we have. But there is this tension between the federal regulator and the state regulator. How has that materialized, or what's been your experience kind of working with the Fed, the OCC, but also the state departments of banking around stablecoins?
Well, we have to build on the regulatory regime that the states have built. And we've taken the most sophisticated model of all 50 states, which is the New York stablecoin regulatory regime, and build a federal regime around what we've learned from the state of New York's regulatory regime. And that is the architecture of the bill that we've passed out of committee with very nice bipartisan support. So we utilize the states and the competition created by 50 different state regulatory regimes, and we create a federal floor for what a stablecoin is. It's one-to-one backed with high-quality liquid assets. That means that if you take a dollar and turn it into a stablecoin dollar, that it actually is backed up with dollars or short duration dollar-denominated assets. So think of treasuries on the main. So we narrow the aperture of what is a stable coin, and we give it a federal regulatory floor that makes a whole lot of sense. And then we allow it to function like a number of financial products with the use of the states as the incubators of new ideas, and the Fed as a safety and soundness regulator. And so we've tried to balance those interests between creativity and having a safe and sound product available to customers. And I think we've done a nice job balancing those two at times conflicting goals.
It is a tough balance, and I think the U.S. banking system will certainly be interested in getting involved with this, because it is a revolutionary technology. Now, as we look at the payments rails that stablecoins provide, the impact and ability for payment stablecoins to potentially, be the cornerstone of a modern payment system, how does the federal framework in particular, and you mentioned New York, how do you think the Federal Reserve or other federal regulators will implement that from a regulatory perspective with their member banks?
Well, we put constraints on federal regulators, broader actions they can take, and that was a well thought out piece of engineering here for our payment stablecoin legislation. The goal here is to make sure that it has a lot of the same qualities of banking, but also recognize that it doesn't need the additional regulatory burdens placed on banks because it's not taking any leverage. This is a one-to-one backed product that should be very simply regulated because it's a pretty simple product. That helps with safety and soundness of this product. And then making sure that on the front end of this, people can utilize it in a wide variety of ways to meet whatever their payment needs are, whether it is to convert into a digital world of other digital assets or cryptocurrencies, or as a payments rail. And so there's a lot of flexibility there.
Well, Mr. Chairman, I'm cognizant of your time. You've got to get back to legislating, but I want to leave you with a couple questions, some hot takes. You're welcome to comment on them or not, depending on what you'd like to do. But in particular, the Bitcoin spot ETF, and also any predictions on if Chair Gensler will resign, take the honorable way out of the SEC.
Well. On that, I don't venture a guess, but on a Bitcoin spot ETF, look, it should clearly be done. The law is on the side of those that have filed the appropriate paperwork. There's clear market surveillance. This is a very mature market and a very mature technology. That enables people to see transactions in the clearest way possible. Some of the clearest markets in the world are digital asset markets because you can trace this very, very clearly and cleanly. So we should have multiple ETFs approved, and it should be done within the next couple of months. I mean, it would only make sense. The Securities Exchange Commission is risking a massive suit if they fail to adhere to the basics of the law here.
Well said.
That's a hot take, but I can get hotter on other issues.
Well, we look forward to that at a future juncture. Mr. Chairman, thank you for spending a few moments with us, and we'll let you get back to doing God's work there in the legislature.
Hey, thanks so much. Great to be with you.
Yes, sir.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.